Hi guys, good afternoon and welcome to Money Control. I'm Karunya and with me is Manisha Gupta to give us an update on what's happening in the commodities universe. Hi Manisha, all eyes today on metal prices and why they could be in for further pain as winter starts in the European region. Talk to us about how the weather change can impact supply and demand scenario.
Well, whatever we've seen happen in Europe this time around, where nearly 50% of capacity for zinc and aluminum is shut, and more could happen, is because of the weather, the gas availability, and affordability. We've been talking about that. But are the concerns done? Is 50% capacity shut enough to keep the prices higher? We haven't seen that happen. What the markets are fretting about right now is that while European Union has enough gas now, their target was to get at least 80% of their storages filled. We do understand, as per the latest reports, that 87% of their storage is full now, so they are prepared for the winters. But then remember, they're only prepared for the winters, and this gas is only for heating purposes. Will this gas be utilized for smelting, mining purposes, for manufacturing, etc.? The big answer is no, maybe. And you could be looking at some more smelting capacity shuts there. So that should actually keep the prices higher. But the other worry is, will you be asking for metal as a product or as a raw material going forward? Maybe not. So while the supply concerns are there, the bigger concerns really seem to be coming in from the demand side of it. And that is where the markets are stuck. So while this week has been good, we are looking at most metal prices up by 0.5% to even 7% on the higher side. For something like a zinc, which is up 6%, aluminum is up 8% in this week. But the markets are looking at a very short term right now. For the longer term, for by the end of this year, for this current quarter, are too many people bullish on metals? No, they're not.
Okay, all right. So, which are the metals to keep on our radar then, from a trading or investment standpoint, for those of us who are interested in commodity trading ahead of all these developments that are set to happen in the next couple of weeks and months?
So I think if you're looking at the markets today, it is going to be about the US non-farm payroll data, which is coming in the evening. We've all been talking about that, and if that would be a near-term or today's direction setter. And then, of course, going forward, it's going to be about the US dollar, the interest rate hikes that we will see in November and December. When you ask about what metals should be on radar, well, it definitely should be aluminum, because that has seen a very sharp decline. I mean, pick up any chart, Karunya, and that will tell you whether it's going to be about EV, it's going to be about automobiles, construction, infrastructure going forward. Aluminum is one metal where the production in Europe has been absolutely on the negligible side. When you look at the inventories in Shanghai or on LME, we have seen very sharp declines there as well. So aluminum should be the metal if you want to start buying in metals, if you want to start exploring that area. Aluminum is where you should be long at, in sense of the underlying commodity, or even the stocks that are related to producing aluminum is where you should be looking at. The second on the ranking side clearly would be zinc, and then copper perhaps. I mean, these are the three metals you should keep an eye on. The LME inventories are much on the weaker side. If the demand rebounds, you'll see demand coming for these metals on the first wave.
Okay, and what about the impact on Indian consumers, manufacturing companies, automobile companies, construction and cap good companies? How will they stand to be impacted with this supply and demand disruption of sorts that Europe is staring at? Could back home also, we could see an impact?
Well, yes, the impact has been quite huge. Most of the metals, even after this week of gains, are still nearly 18 to 40% on the weaker side from the kind of highs that we saw in this year itself. While Europe clearly is going to be the big major watching point here, keep an eye our sight on China as well, where we are looking at the real estate sector really going down in the dumps. Even as China has come out with some stimulus measures and some freebies, etc., it really doesn't seem to be working right now. In China, the bit of a better data that we have seen come in clearly has been on the infrastructure side of it. That is what really seems to be moving. So if the metal demand does come in from China, would be from infrastructure and not from the real estate there. And in that case as well, keep an eye on copper and aluminum. These are a couple of metals that could actually do well. Just to put it very clear right now, copper could be really trading in a range of $20 down or $20 on the higher side from here on. Most of these metals perhaps will end up this year lower than where we are trading right now. So when you look at the quarterly range, we perhaps could be on the lower side. We could end the year lower from where we are right now. In that sense, also, aluminum perhaps could do slightly better, is where the cars really seem to be stacking up right now.
Okay, all right then. Thanks much for giving us that update and the heads up on what's likely way forward for the metals, especially in the Eurozone. Thank you so much once again, guys, for tuning in. We'll be back again on Monday with a fresh new update on commodities.